Hello and welcome to another financial analysis video. Today I'm talking about Bank of America and their third quarter earnings. You know, Bank of America has it's had a nasty reputation ever since the financial crisis. Their acquisition of Countrywide and has really led to a lot of lawsuits. Essentially, they've been a litigation target, and I've been mixed up and down about Bank of America. And my mood kind of does shift with what their earnings go towards. And they reported 37 cents per share versus a 33-cent consensus. So they beat earnings, and they beat it by 4 cents a share. I want to dig into the returns, and this is where I'm seeing some optimism. Now, again, a big bank, you're going to have 0 to 1% return on assets. So this going up is, you know, it is what it is. It's not really that important. But having a stronger return on equity is, and there's some steam building here to where now Bank of America is over at 6% return on equity. I don't know going back how far what that really means, but what you could see by looking at just this set of charts, they've always had a revenue problem. Always had since the financial crisis. But now we're seeing earnings beginning to kind of build back up. And keep in mind, they're coming off of light earnings, so you're going to see huge gyrations here in terms of quarter to quarter. Yet, it is still increasing, and you have the increasing return on equity. So, I feel like Bank of America and their cash flow information here isn't really available. But I feel like they're beginning to sort of turn the corner. And again, this is where you look at a company trading at 69 cents on the dollar price to book ratio. And I want to show you something a little bit special that I put together. This is the price to book ratio for all of the big banks in the S&P 500. And we see Bank of America right there, 69 cents on the dollar. Compare them to other companies I've done this analysis for. JP Morgan, 93 cents on the dollar. Citi, 70 cents. I've written some good and bad articles about Citigroup. And Wells Fargo, which I'm also talking about, and PNC recently. They're trading over book value. PNC slightly, Wells Fargo much higher. So, I mean, if you're looking for a value play here, Bank of America may be the place to go. Let me see if we can take a look at return on equity. And this is why you see big banks trading over price to book value, is when they have great return on equity. Well, Bank of America isn't quite there in terms of you know, beating the pack, but if you look at the companies that are doing better than them in this group, BB&T is a pretty big bank. JP Morgan, pretty big bank. It isn't really the size of the bank that's determining the return on equity. So they're really slightly below the middle of the pack there. But, again, they're improving. So, you know, Bank of America is a company that would be good to dive into if you have a little bit of patience, because it may not pop just right away. However, I think there's $18 to $22 written all over this stock sometime in 2016. So, you know, invest in it at your own risk, because at any moment there could be another lawsuit or a legal problem as well. Not to mention, we'll see down the road how they deal with dramatic market moves, although I think that is out of the question in the near future. I hope you enjoyed this video. Happy investing.